Hello, good morning, good afternoon. Thank you for joining us. My name's Apurv. I'll be the moderator today for our panel. I've actually had the pleasure of having both of these panelists on a panel last year. And at that time, we were talking about the potential impact of a post-COVID environment, especially in the context of rebalancing, et cetera. Now, that was very theoretical about a year ago, and we're seeing some real examples of how that's shifting in today's date. And we'll look to unpack some of those components. Some of the other aspects that we'll focus on is SMEs and how anchors play a pretty significant role when it comes to the economic growth. Matter of fact, 90% of the businesses that exist today are SMEs, and about 250 million of these enterprises are lacking some sort of funding or are inadequately funded. Some of the other aspects we'll touch upon is components around last mile, the gap in last mile, and the importance of technology and traceability that can happen in that context. And we'll also talk about components around AI, ESG, maybe not so much AI because my panelists did not want to talk about that, but definitely ESG. And I'm also well aware this is the last panel before your lunch, so we'll try to keep this short and sharp. And I see some of you already enjoying that lunch. Thank you very much. So cool, let's get into the panel. And before we get into the questions, I'll pass it off to maybe KG to introduce himself and then.
Sure. You might have to switch off the mic then. Hi, hello.
I'm speaking. Hi there, absolute pleasure to be here. And as Apurv reminded us, both of us, that we are those two old foggies who make our annual appearances in this auditorium. I think this year, as he said, also that some of the hypotheses and some of the assumptions that we have seen from previous years is probably a little bit more telltale and come to fruition. And that'll be probably interesting to speak about. So KG here, Kingshuk Ghoshal, been a Standard Chartered banker, ran their MNC business for ASEAN markets for close to 16, 17 years in various capacity, shapes and forms. Prior to that, about 6-7 years in the technology sector as well. So then, a problem statement bug struck me from one of my clients, and decided to conceive what we now call as TASConnect, which is Treasury and Supply Chain Connect, as a working capital platform as a service platform for clients, and very, very happy to have been incubated and funded by Mr. Alex Manson. So yeah, and I'm the co-founder and CEO of TASConnect, and yeah, look forward to the next few minutes. Sid?
Hi everyone. Well, thank you, Apurv, for having me here back. It's always good to have this discussion. Many of these discussions have been over a beer or coffee, but in front of a panel, in front of the audience, it's great. My name is Sid. I'm a partner in PwC's International Growth Practice. I think we've been working a lot with clients over the past few years on driving global transformation and rebalancing initiatives. And I think, as Apurv was mentioning, we're seeing a lot of what's been talked about in the post-COVID era, a lot of what we've been saying actually happening in fruition. But there is a level of practicality to it. So a lot of challenges also emerge as we actually go into execution. So it'll be good to discuss some of these challenges and issues, especially for small and medium enterprises, because they form the backbone of the economy, I think not only in Southeast Asia, but globally. So look forward to the discussion.
Great. So I'm going to come right back to you, Sid, because we're talking about challenges. And I think challenges in the context of rebalancing supply chains and something that I guess we were discussing last year, which was around theoretical impacts. Well, we're actually seeing that today, right? We've heard about Apple and the new manufacturing of iPhones and that entire ecosystem to a degree moving to India. So, realistically, what are some of the challenges from an SME standpoint that you're seeing in the context of navigating this rebalancing initiatives? So I'll go to you first, Sid, and then maybe KG, you can give me kind of the anchor lens as well as to what's their role in helping their SMEs navigate these waters and rebalancing their supply chain. So, Sid.
Yeah, I mean, before going into challenges, I think need to state the obvious a bit about, I would say, the opportunities for SMEs as well. Rebalancing as a topic globally has caused quite a lot of uncertainty, I would say, in the economy. Organizations are looking to revamp their supply chains, which have been around for decades, right? It's not an easy decision to suddenly say, okay, I want to move, I want to redesign my global supply chain. It causes a lot of uncertainty. But one thing that we've seen, especially sitting here in Singapore and in Southeast Asia, wherever we are having the rebalancing discussion globally, Southeast Asia always plays a key role. Now, what that means is, as organizations break up existing value chains and redesign new ones, SMEs in Southeast Asia are very well positioned to participate in global value chains that they were not part of previously. So there is that underlying opportunity, I would say, to get involved, and it varies across sectors, of course, but that underlying opportunity, I would say, is a great driver for growth going forward for the region. Now, having said that, with these opportunities, of course, there are practical challenges. I think one of the challenges we'll discuss today, of course, is on the funding and financing side, because capital, as you were saying, access to funds is critical. The other area to focus on is on the capability side of things. Being part of global value chains, require you to build capabilities which are for the future. So digital plays a key role. I think developing talent and training them is very critical. And the last one, which we are seeing here, what is happening is SMEs have been well equipped to function in their domestic market. So I'm, let's say, a potential SME, I'm in certain market, Indonesia or Thailand, I've been working in that market, I'm well aware of the environment and how to navigate it. But there are opportunities beyond my home market. So as I move into becoming, let's say, a larger SME beyond my home market, how do I navigate a new environment that we've not been part of? So I would say these are some of the questions they need to answer.
And then I guess maybe before I go to KG, from an SME standpoint, what do you look towards, let's say, your traditional bank to help you kind of go outside of your home market, to your last point? Or is there a gap there that, platforms or fintechs could plug?
I think there is definitely a gap in terms of what can be plugged in. See, the traditional banks play an important role in the SME ecosystem. So often the first port of call is traditional banks to say, hey, this is what I'm planning to do, can you help me? Now, the challenge becomes the capabilities of those banks to help them beyond local borders. So in a way, I would say that's a gap, and many SMEs are sort of looking for that answer. What can be the solution? They don't want to necessarily turn away from traditional banks. I think there's a comfort in working with them, but how can they support the next wave of growth? That's the answer they're looking for.
Got it. So maybe to KG, who's running a fintech, I guess there's an anchor lens as to navigating and helping your SMEs, but is there anything that you're looking to do with regards to plugging that potential gap that they have when it comes to, again, navigating these waters and expanding?
Yeah, certainly. And thanks, Apurv. Many truths coming out of what Sid just shared. And I think one of the realizations over my last 18, 19 months of startup journey in the space of trade, finance, supply chain, working capital, etc. in this part of the world, we are, by the way, very Asia focused, is also that we spoke about rebalancing, right? And COVID was that watershed moment which actually made us realize or emphasize more on the factors of rebalancing and the impacts of that. Now, there's one truth to that. Underlying truth is that there is a reason why supply chains exist in Asian markets. Supply chains exist in emerging markets. This is because of the arbitrage of labor, of cost, of demography. And which is where you talk of rebalancing, a Dell will never be able to withdraw its supply chains from all of China and all of Asia and go back to the Americas. They will always have to reside in the emerging markets. And emerging markets is essentially Southeast Asia, South Asia, Asia, right? So that truth being there, therefore we now are looking at the challenges and opportunities that come with it to solve for it, right? And that is what we have been actually, been really working with our anchor clients. Look, I mean, SMEs, just to state some facts, right? SMEs form, if you look at Southeast Asia or ASEAN, SMEs form about 95% of the enterprise sector. MSMEs included, I would say, MSMEs, so SME and micros, about 95%. 70% of the workforce is actually the MSME sector. And guess what? Averagely about 40 to 41% of the contributions to GDP come from this sector. So it's not something that we can ignore. Therefore, if rebalancing does throw up challenges, we need to solve for them, and opportunities, we need to take them, right? And which is where what we've realized in our journeys is that, given these truths that Asia or Southeast Asia will always be an emerging market hub for rebalanced or disrupted supply chains, spokes and trades and etc. However, a large part of what we call as that ubiquitous $2 trillion gap in SME funding and all that comes from the lack of access to pockets of liquidity there, right? And when we look at the whole, question of how the MSMEs are rebalancing, one of the things that Sid brought out was to look beyond the home market. The realization is also that, I mean, we deal extensively with the Malaysian government and a few of the governments in the region, and they keep telling us that, one of the impacts post-COVID and post-rebalancing is also about realizing that we need to withstand shocks of macroeconomic disruptions, shocks of supply chain disruptions, etc. So which also means that MSMEs cannot just be looking at domestic markets. We have to be looking at markets beyond your home market. Now, if you have to do that, it is extremely important that you work a mechanics of how it could all work through, right? And what we therefore, I mean, not just because of us, but what we do at TASConnect is to look at the problem statement from an anchor down perspective. We believe that these SMEs are ultimately feeding into a larger mega ecosystem of an enterprise system. Be it a Unilever ecosystem, be it a Lenovo ecosystem, be it some of the big large enterprise ecosystems. They are all parts of cogs in that whole big wheel, right? So if you then solve the problem from a top down, you are actually able to trickle down a lot of the working capital lubricant into many of these spokes. And if you do that, then you're able to solve for a lot of the questions and challenges that we have been facing today. And that's essentially some of the successes over the past 89 months that we've seen. We've got a few Fortune 500 clients on our platform. One very large Fortune 500 FMCG client, European FMCG client, I don't want to go beyond that, asked us to solve a problem for them across their cross-border distributor networks across Africa and Middle East. And we just went live with them last week, and I cannot tell you the value that it gave back to these guys, because they have not been able to kind of facilitate the payment on time, collection on time, therefore the DSO overdues, resolution, etc., on time. And that leads to various other problems, not just working capital issues at the distributor end, at the last mile end, but also at the enterprise end. So if you're solving for this, the anchor is enabling it across the pyramid down to the last mile. And that is a huge way to actually make this workflow enabled, use technology, and get it out there. So, I'll pause there.
That's
we over time?
No, I don't think so.
No, I just want.
I just wanted to ask you, KG, I mean, from an anchor perspective, of course, a lot of this, to you as well, a lot of this makes sense, right? But the moment we go into SMEs, I mean, we, in one of our publications, we conducted a survey of SMEs, and all of them believe that adopting many of these solutions are going to be beneficial for them. It's not that they are not aware, but there is, I would say, then the second question we ask them is how many of you are looking to adopt this in the next 1 to 2 years? And that's where there is, I would say, it's a mindset gap, or it's some sort of an obstacle from an SME perspective to look at many of these solutions. So just wanted to get your thoughts as compared to the anchor side.
And certainly, I think that's a primary challenge. So if I'm a keyboard button maker for a Lenovo sitting out there in Taiwan, I'm a mom and pop, I'm not worried, I don't have sleepless nights about accessing the internet or getting my digital tool, right? My problem is to how do I procure my material or resins or plastics to make my keyboard buttons. So therefore the adoption and the fact that you can make this work much better if you adopt technology and therefore start thinking about it, that is the adoption challenge. And that is, I would say that that's where the the development curve is very different across regions. So if you look at ASEAN or Southeast Asia, I think primarily we wanted to focus on this area, this region, right? So we're a little bit behind. I mean, I don't count Singapore as part of the emerging ASEAN story, but the emerging ASEAN markets, it's hitting them. It's that realization and the adoption point is probably hitting them. But if you look at South Asia as a region where India is a big driver, it is humongously developed. Okay, although India is a market which is very large and it can absorb a lot more development there, it's humongously developed. It's if you look at what ONDC as a the One Network digital commerce that the government has actually initiated, it is about creating a digital infrastructure for SMEs to come and participate in that, right? And that is something that is creating a huge positive change in the mindset for adoption. So the 2-year timeline that you spoke about is probably crashing in some of the other regions, whereas it's picking up in Southeast Asia, but a few things need to be done there. So therefore we are also in our own interest, we also encourage our peers to be probably pushing the same story, so that there is a the pie gets bigger for disruption to work, and only then change can happen. Yeah, and that's how we look at it.
Fantastic. Then thank you, Sid, for playing moderator for a minute there.
Yeah, I was a little confused.
KG's clearly in the hot seat today. Cool. So I think a couple of interesting themes unpacked there around tech, and we'll come back to the role of tech in the context of deep tier financing all the way to traceability and last mile and so on and so forth. As well as sustainability, but before we get to that, I want to talk a little bit about kind of the choice of growth when it comes to scale, and how you spend your capex in the context of today's environment, especially when previously there was almost a reliance on bank debt, which increasingly is becoming unviable due to the high interest rate environment that we're in. So I guess question being, and again we can start with Sid and move to KG, but in your view, can SMEs still rely on traditional bank debt to grow? How do they go about scaling, and what are some of the options that they have to access this financing?
Yeah, I think it's a tough situation, right? For SMEs, of course, typically you would see SMEs from a mindset perspective have been very I would say agile and aggressive in driving growth, right? It's all driven by the owner of the business looking to identify white spaces and grow. But what has happened is, if you look at, if we look at the supply chain, I would say tier 1, tier 2 maybe suppliers, I think they are well placed to tap into this. So even within SMEs, if we look at tier 3, tier 4 suppliers, that's where the issue lies. I think the challenge for them is getting access to finance to fund the next level of growth. I think for some of them, and just to lay it out here, the challenge is also to have access to funds to survive in difficult times as well. It's not only about growth, but also to protect themselves, when there is an impact or let's say a blip in demand. And that's where traditional banks have not been able to fulfill that need fully. And from the bank's perspective also, they have their own, their own models and looking at credit risk and the cost of capital, etc. So they have their own reasons for not being able to service that requirement. But I think that's, if we are looking for tapping into this opportunity, building on what KG said in terms of the contributions to the economy, how can SMEs contribute more? I think that's an immediate requirement, how that gap can be fulfilled.
And then maybe just come back to you again, Sid. Sorry, I keep doing this. You talked about tier 3, tier 4 suppliers in the context of supply chains. And I remember maybe 2, 3, 4 years ago, there was this whole thesis or thematic around how blockchain and tokenization and fractionalization of invoices could actually help liquidity get to that level. Are you seeing any areas where that technology is actually being used viably, or was that just theory at that point in time?
Again, a very practical viewpoint. In some markets, it is being used widely. I would say what we've seen is within China, adoption has been significant, but that has not been replicated in many of the other markets. That's the reality of that situation. It was touted as a game changer, but global adoption, especially, I would say rest of Asia, if I call it, I think there's still some way to go there.
And I'm assuming that comes down predominantly to regulatory landscapes, fragmentation of Southeast Asia.
I think for any significant change to succeed, it needs sort of 3 stakeholders to participate. I think the government and regulation is always critical. I think the large conglomerates need to play a significant role in driving a lot of these changes. And I think the third part is, which is often underlooked, is the underlying talent. Whether we are looking at education, universities, building those skill sets that are required. I think all these 3 components sort of need to come together to make this change, I would say, viable and long lasting.
All right, KG, over to you. You've been quiet.
Too long. You just snatched the mic from me. No, again, Sid has probably laid it out very nicely, and maybe if I could just restate what our initial sort of query was, that can the SMEs rely on financing even in the high cost, benchmark cost, rate cost environment, and would traditional banks still go as the single source? I would say first is yes to the first one. Second is definitely no to the second one. In the sense that SMEs need to find ways to actually keep efficient ways to finance themselves. There are ways to do it, and that's where technology does come in to do it. And we'll touch a little bit more on the deep tier and stuff, how some of them have been successful in some markets or not. But the second one is traditional banks, right? So frankly, in my experience, I can see clearly about 4 different pockets of liquidity that actually plays in funding the various tiers of the supply chain from your suppliers, right? From your big tier ones to maybe the smaller ones. They are the traditional banks who are the house banks of, let's say, the big anchor. Okay, the Standard Chartered, the Citibank, the HSBCs of the world. Then you have the regional banks who know the regional markets well. Then you have the local banks who know the local participants extremely well. And the fourth one is a very interesting private credit market where you actually have the NBFIs and NBFCs. And they are actually performing a very, very important role. They're expensive, but it's often a choice between having a cylinder of oxygen or none at all. So that's something that the SMEs, are leveraging today in order to get to that financing. So we are a bank-agnostic platform. We love to work with any of these pockets where it makes sense on a horses for courses basis in specific market formations. And Apurv, you mentioned something about ASEAN markets being different. I absolutely agree to that. Every market, there's no cookie cutter in ASEAN. Every market has different market dynamics, demographies, demographic dynamics, cultural dynamics, regulatory dynamics. So which means also that for a large institutional bank or even a regional bank to take a credit appetite on, let's say, Malaysia is not the same as in Indonesia or in Vietnam or Philippines, right? So which also means that you have to go deeper to support this ecosystem with those deeper pockets of liquidity. And that is what we are seeing, and that is what we are also enabling as part of our delivery to our clients. So one of the, again, agrochemical Fortune 500 client use case that we are under sort of implementation today, we are essentially doing that. We are looking at Vietnam distributor depth of that organization to get alternate capital, working capital made available through digital workflows into those distributors and going right down to the farmers and growers and all that. So that's happening, that's possible, But again, relating back to the point that it can be very powerfully anchor-led. It can be very powerfully driven by the mandate from a top-down approach. One of the stakeholders that I think Sid mentioned is how the large enterprise is enabling that to happen, so it can happen. Deep tier. Yes, we've spoken about fractionalization, we've spoken about tokenization, and I was in Shanghai recently. It just blows your mind if you look at what China has achieved, but China has achieved deep tier in its own way. There is a blockchain which runs in China, which is very, very China specific. You heard of Contour, what happened with Contour over the last week and a half. So that's been the challenge, that there are no standards or standardizations that are yet emerging to adopt technology like a blockchain or a tokenization to get this going, because there is no universal acceptance of policies or lines that I can be guided by. My algorithm on my blockchain would be very different to another guy's blockchain, and that has been the adoption challenge in going deep tier. However, there are other mechanics as to how you could solve for this. What we are doing at TASConnect is also looking at true digital convergence when it comes to your trade and supply chain, right? So one of the things that we realized early in our journey was that it is not often enough to only provide for resilience in your financial ecosystem or financial supply chain. It is very, very important to also give the banks these pockets that I spoke about, the traceability and the visibility in the last mile to your physical value chains, of how your physical value chains are performing. Because at the end of the day, these institutions, FIs or private credit, they're going to take a call at the last mile. You call it deep tier, you call it frontier, but they are going to take a call on that last mile. If they have to take a performance risk on that last mile, which is without the payment obligation coming from the big anchor, they have to be very convinced about the physical performance of that last mile. So what we are giving today is a true convergence where both your shipment tracking as well as your financial management, working capital management, cash conversion, cycle management can both be tracked on the same window as widgets. And you enable that, and the banks get more comfortable to say that, all right, the keyboard button, the resins have arrived, the factory is producing it, the chomping and stamping is happening there. Okay, I can release a part of my promised funding. So that's how you can alternately solve for this, rather than being completely reliant on this fantasy of a technology called tokenization, which is yet to take off. That's something that we are realizing.
That's great. I think, and conversely, when it comes to traditional banks, being able to provide that level of transparency or technology, especially on legacy architecture, becomes increasingly tough.
True,
and that's where platforms like TASConnect play a pretty critical role. And I think it's also a complementary relationship. I think initially we started with fintechs almost a decade ago, where fintechs are going to overthrow banking and blah blah, and it's really about collaboration and how we can provide a cohesive product to these ecosystems. Cool. I think we're on the topic of digital right now, and it's a simple question, but I kind of want to marry the point around the fact that cost of capital is getting expensive. There is competing priorities when it comes to, do I redeploy that capital into my traditional business, or do I do something else with it? So maybe I'll go back to Sid again, as he's been quiet for some time. From an SME standpoint, where does digital adoption stack with regards to priorities? And do you think it's too low? Is it too high? Does it need to move higher? So that's, I think, one aspect of it. And the other component, I think, when we get to UKG is the fact that, I remember when we were looking at building TASConnect in the early days, it was for a lot about the initial anchors, for example, Lenovo, about how I can get all my supply chain on the same platform. So it was a top-down approach. So Sid, would like to get a bottom-up view, and then maybe KG, if anything to add from a top-down perspective as well.
I think, from the bottom-up perspective, definitely the priority or the focus on digital, there is room for it to increase, to grow higher. Okay, especially for SMEs, what we've been seeing in a lot of SMEs, the next generation is taking over, and they have digital, I would say, as one of the top priorities, especially from driving adoption, driving sales. B2B commerce is also coming up as a huge focus. But at the same time, there is skepticism around, how easy is it going to be for an SME to adopt and realize the value from that digital adoption, right? I think one thing is to invest and saying, okay, we've implemented a solution, but the crux is, do we realize the value from that solution? And I think that's where, leaving aside, the funding and the resources required, I think there is skepticism on two things. One is, how complex is it for me to implement? Is it going to impact my day-to-day business as usual? Because they cannot afford BAU to be affected by digital implementation. And second is, if we adopt digital, is it going to help deliver the value, that is worth the amount of dollars that have been put in? I think these are, I would say, the questions that are emerging. Anecdotally, a lot of clients have been impacted by digital delays in digital implementation, interoperability across different systems, because they have different platforms, different solution providers they are working at, and they get frustrated. Oh, this solution doesn't talk to that solution, so how do I deal with it? And they don't have the I would say, the mindset to deal with so many problems at the same time, and it can get quite frustrating for them. So, these are some areas. I don't know how KG is solving for these, but it will be good to hear.
I'm looking at it top-down. I'm completely avoiding that area that you spoke about. Because I believe that if you look at it top-down, it solves for itself. But yeah, on a more serious note, I think what Apurva asked me to comment was on how are we looking at it from a top-down perspective. I think digital adoption could always be faster, could always be more accelerated than it is. But I think what is encouraging is that if you look at how enterprises are addressing it, is that first is it has to come from the top, and right at boards and C levels there is a realization that just like sustainability and ESG and SDGs, there is technology, and there is that G is also very important. Technology is also very, very important. Digitization, innovation is very, very important to actually have that DNA go through the organization. How are they making those changes? I can't think of any enterprise or corporate today who does not have a CDO, Chief Digital Officer, or the likes, right? Even in your very large, enterprises with very complex supply chain organizations, they have something called the CDCO, Chief Digital Supply Chain Officer, howsoever that abbreviates. So within functions, they are actually having digital officers. So that's encouraging. Then the second part is that when you looked at decision making, especially when it came to IT capex and all that in large enterprises, it was always, and especially with banks and having lived in a bank for most of my professional career, it was always about, no, I'll make it. I will invest in it and I'll make it. Okay. Today, that thinking is changing. Be it FIs, be it enterprises. The make versus buy versus partner is definitely something that is also accelerating the adoption of technology. Because there is a greater realization that if I were to invest in what TASConnect is delivering, by the time I make it as an organization, it'll be 3 years, and there is an obsolescence fear of whatever I've made, and I don't control that technology. So why not let TASConnect do what they're good at? We are cloud-based, we are SaaS-based, we can scale, we can scope for you, and we just partner with them, and that realization is also driving a lot of adoption better in the market, and again at the top down. How does it help? Definitely it helps because, the organization is now aligned well, or increasingly getting there, to be aligned well to deliver this, the whole digitization efficiency through its ecosystem, through its value chain. And guess what? That same will then come into impact or affect or maybe enable the last mile at its SME bottom-up level as well. So whether the SME likes it or not, and again, just the other, the FMCG example that I shared with you. So we enabled a distributor in Nigeria, one of the most difficult markets of Africa, last week. And it was not happening with that enterprise for years, till then. So once we enabled that, and once we did the successful transaction, there was a huge validation within the organization. Besides the euphoria, of course, but the huge validation within the organization was that we believed in the solution, we partnered with the right guys, and we delivered the right execution. And even our last mile is enabled now, right? And that, guess what? It builds cohesion. It builds a big sense of loyalty, belonging across the entire ecosystem space for the large enterprise. And that's what we are very, very excited about as well.
Okay, last question before I turn it over to the audience. Kopal showed me there you go, 5 minutes left. So maybe the last point, I'll come back to you, KG. I think one of the other areas you're relatively excited about, correct me if I'm wrong, is ESG, sustainability, and the role of TASConnect and some of the capabilities you're looking to build out. So maybe you can kind of tell us some of the areas that you're focusing on as a platform, how that's going to work out in the context of sustainability for SMEs and anchors. And then Sid, I'll come to you as the final point on, again, that choice, that incentive that's required for SMEs to change their sustainability practices, because again, there's a cost involved. So maybe KG, up to you first.
Sure, and again, a very, very important topic for us. Look, as a platform, we are not obligated to provide ESG services. But what we realized is that when we are connecting through and bringing that whole, sort of ecosystem rail across the organization, is that it also helps us to enable the rollout of ESG across the organization. So one of the big challenges that, boards take decisions and make decisions and commitments for a net zero. They make a commitment for a full net zero or 80% net zero by 2030. Little do they realize that at the backyards in Asia, Southeast Asia, how difficult it is for the middle office of that enterprise to actually measure, capture, and track the ESG performances, right? You cannot do it without technology, and most middle offices are cost centers. They cannot be deploying warm bodies, throwing warm bodies to actually collect data and doing that. So you need technology, you need to leverage technology. So we realize that as a very important side effect, a positive side effect of what we are doing and delivering to our supply chain clients, our ecosystem clients, is a rail where I can, enable ESG rating services or ESG deployment services to their ecosystem. Now, how that is important in today's context is that if you look at the rollout of ESG, there is scope 1, 2, 3. Scope 1 and 2 are relatively easier measures to capture within an enterprise, how much power you consume, how many cars you drive, how many trucks you consume, etc. But the biggest overhang of pressure from European compliance law and all the the net zero commitments that you have is about enabling scope 3. Scope 3 is how are you ensuring that your partners, suppliers, distributors are all enabled on this. You have no control on those as an enterprise middle office or an enterprise management. But if you do have the connect into that ecosystem, and if I am as a a platform, as a service, able to carry a ESG rating agnostic to any rating agency it may be, it could be EcoVadis or it could be a Humma, who we are integrated, by the way, one of the portfolio companies, IC Ventures. We are then able to actually roll this out into your ecosystem and therefore incentivize your suppliers and enable them to actually come on board and sign up to the ESG story. And that's a big delivery, which will be very, very difficult to do otherwise. And it helps banks, because banks can then do sustainable finance, based on the fact that there is a traceable ESG reporting which is actually going out there across the ecosystem. And that's again an area that we are seeing a huge impetus, focus from a lot of the enterprise clients that we speak to.
Yeah, I mean, I think KG covered most of it, but the the basic, I would say, my opinion is actually SMEs don't need incentives, they need support, right? If you look at it from their perspective, they are well aware that in today's world and the world of the future, ESG is going to play a critical role. Customers are looking for it. Even investors are looking at ESG as a factor, when investing in many of these sectors. So they're well aware. What they need is to understand how. How can I do it in an efficient way, which is, again, doesn't negatively impact, my business today, but helps me prepare the business for tomorrow. And I think, one of the underlying, I would say, themes that has been coming out from this conversation is, the ecosystem or the partnership approach. I think that is going to be critical. You can't push it down to say that, it's not a carrot and stick approach. It needs to be that, we can work together across the value chain to enhance and deliver value. And I would say governments, institutions can play a critical role to support, especially a lot of the micro and small SMEs in making that journey going forward.
Cool. I think we have time for maybe one or two questions from the audience. Any questions?
So I have a question. Coming from India, seeing the different, OCAN and ONDC very active in India, does the cluster approach work much better in SMEs rather than the ad hoc approach? Because SMEs, in India, they have a different cluster-based domain expertise, right? So somebody's doing handicraft or somebody's doing, let's say, garments, right? So addressing their financial needs on a cluster, does it make more sense?
That's a great question. Absolutely fabulous question, and I don't think that people have got to a solution point in that, and that's probably going to exist as that decision point. But what we are seeing is that, sorry, if I could get your name again?
I'm Ravi Mudani.
Ravi, hi. Ravi, thanks for the question. If I could get, the crux of your question, Ravi, is that when we are looking at, talking to the large enterprises, right, we definitely see values in the cluster approach. Look, at the end of the day, ONDC has created a e-commerce portal platform. It's like a marketplace matchmaking, right? But the incentives there are a little bit different, right? So you're left to the SMEs to actually harness it. But in a cluster, the incentive is driven from somewhere by someone. And unless you have those incentives aligned to be driven, it will not take off. Okay, you can create a cluster, of TREDS, right? TREDS in India, a lot of, there was a government regulation going out to every company to say that please use TREDS. Everyone registered on TREDS, but if you look at the throughput on TREDS, it's suboptimal today. Maybe it'll pick up. I'm hoping it should pick up, it would pick up. But that's also a play where, if you were to ask me, a little bit selfish interest to actually promote the cluster approach, where if you have a garment manufacturer actually enabling and benefiting its cluster of suppliers. Those suppliers belong and also supply to other manufacturers, right? So you are actually creating a very enabled cluster out of that. And think of such a zillion other clusters that you could develop. Rather than leaving all those SMEs to fend for themselves on a portal and a marketplace, there is no incentive to drive that. So, I mean, that's where, but thanks for the question, Ravi.
Any others? Do we have time? 1 minute? No? World Cup predictions? No? Okay, cool. So thank you to my panelists. I think it was a solid discussion, and thank you for your time. Stick around. I think we have a lot more panels, and please enjoy your lunch. Have a good day.